Back to another weekly review. We're going to be looking at the trading week of August 17th, 2026. Getting data out of the way, Monday, Tuesday, we have nothing major going on as far as economic data. Wednesday, we have the FOMC meeting minutes coming out at 2 p.m., so I'd expect a little bit of volatility later in the session on Wednesday. Thursday, we have jobless claims today, 30, as well as a manufacturing index. And then Friday, 9:45, we have we have manufacturing PMI. 10 a.m., we have consumer confidence. So nothing major this week. That's mostly out of the way. As far as earnings go, again, nothing major this week. We do have Home Depot before open on Tuesday, as well as Target and Lowe's before open on Wednesday. So it'll be interesting to see how retailers look, as well, especially their guidance as well. We have Walmart on Thursday, as well as Alibaba. So a couple to pay attention to, but nothing obviously market moving this week. So fairly clear week. We're out of the way of NFP, CPI, etc. Until September, basically. So not much else we have to worry about. As far as this market goes, this is probably going to be a short video because I think this is a very straightforward week as far as what we've been doing. So every major time frame, monthly, weekly, daily, is one time framing higher. And last week was slow. It was choppy at times for sure. It wasn't really the cleanest price action. The volume was quite low on a few of those days. But as far as what we did from a bigger picture perspective, it's pretty important. And until we see a shift in tone here, the default for me, again, like I said last week, is that I'm looking for higher prices because we have shown that there's been a rejection of lower prices. We've broken out on balance on a larger time frame. On the weekly, we broke out from an inside month as well, from July into August, and we've been framing value higher ever since. So until that tone shifts, which it could this week, but until that tone shifts, I'm still going to be looking for higher prices to be printed. So as far as the simplicity of this week, this is pretty much as clean as you can get. I mean, from if you're just looking at this objectively, take every fancy way to approach the market out of it here. This was very clearly the upper distribution of the prior all-time high. IB was very clearly offered all week until we broke out and retested it on Thursday and Friday. So really simply, we have a double distribution profile essentially last week. We have higher prices. We have the highest weekly close of all time on the S&P 500. There's nothing bearish about this at all until we potentially start losing the upper distribution of last week's range. So pivot going into this would be 77.95 down into basically 77.80s-ish. What we want to see from a buy perspective, what we want to see is, we do have a bearish imbalance from Friday. It also is an inside day. So we could see potentially a sweep of this low and then a rebid. But really what we want to see is we want to see no acceptance in the cash session below 77.95. So we don't want to see acceptance below Friday's low. It's really as simple as that. We don't want to see this area that was heavily offered all week that flipped into support. We don't want to see it flip back into resistance if you want to be a buyer on this market in the short term. So 77.95s for me. If we continue to build value in the upper distribution of last week, I'll be looking for obviously the inside day highs to get tested at 78.30s, new all-time highs, and eventually the final target of 78.50s. If we are breaking above 78.50s, the end target for me is a full extension of that weekly balance range, which is all the way up there at 8,050s. Obviously, that's not going to come in a single week, or be very, very unlikely for that to happen in a single week. There'd have to be a huge catalyst for that to happen. It's well outside the weekly expected move. But with that being said, the ultimate end target for me, as long as we continue framing, these weeks higher, is going to be around 8,050 on the S&P futures at least. Where this changes is in the short term, and again, the bigger picture to me here is that none of this price action would be, higher time frame, bigger picture bearish. Even a short-term liquidation and, backfill of the poor structure from the breakout, it's not bearish unless we start to lose that multi-week breakout, that multi-week balance breakout, unless we start to lose this giant gap that we made, unless we start to lose prior balance highs, unless we start to lose that July inside monthly high. Until we see this go, liquidations in this can just make this market stronger. And yes, for sure, you can have a short-term, short rotation trade. But as far as, like what price is trying to do here, until we lose, a big breakout like this, there's really no reason to be, in my opinion, there's really no reason to be, big picture bearish on this market. Simply, that's just how I'm looking at this. And I think, for most people trying to overcomplicate this and trying to pick a top and, burn puts constantly, trying to find a top in this market, which a lot of people are still trying to do, it's just not, it's not worth your time. I've been saying this for, the 2 years I've been posting a weekly video. I've basically been saying the same thing of like, if you're going to lose a lot of money trying to pick a top in the market when you're just basically trying to fade, new highs constantly. There's really, there's really no there's really no faster way to lose money than buying puts at on a market that's ripping higher. What you want to see is failures. You want to see failures of large balance ranges. You want to see failures of price consolidations. Just trying to randomly pick a top is next to impossible. So the short-term scenario, short-term, bearish if you want to call it that, but it's really not. But the short-term scenario really is if 77.95s are lost. The immediate move to last week's POC is 77.75s. But I think really if we start to lose this and washing out a lot of this inventory up here as possible, we'd be failing basically, prior daily balance, would be failing the prior all-time high. And, a move down into the prior daily balance lows at 77.20s and potentially the breakaway singles at 77.06s is very, very possible. So I wouldn't be super quick to catch a knife if we start to lose basically this giant LVN and the 77.95s range. I wouldn't be super quick to catch a knife because I think we could wash out some of this inventory that's been building up here. We could even, come back down and test the 76.50s breakout area again. Again, that's outside the weekly move for next week, so it's not super likely that we do that unless we get a catalyst, but just bear that in mind that, on a double distribution profile like this, if we fail to basically accept, the upper part of the distribution, failing to the bottom of that is usually on the table. So that's how I'll be looking at that. Pretty straightforward. NASDAQ is the exact same thing. So again, we have a higher time frame pivot at 3,050s or 30,050s basically. It's going to be the exact same trade for me here too. So, looking at this again, like we have a lot of we have 2 days of inventory basically sitting up here. If we start to lose 30,050s, then a move down to last week's POC, potentially liquidating all the way down to last week's lows or lower or into this gap down here is definitely on the table. And anything holding this 30,050 range, really it should be a long trade, looking for last week's high, looking for 30,450s, and looking for 30,600s. Anything above 30,600 is just new all-time highs. That's just the way I'm looking at this. And I think, what we want to see really, because the NASDAQ has been lagging, what we want to see really, if we want to see this market be strong, is we want to see the NASDAQ start to take over a little bit. Some of those names that were getting sold, we want to see some money rotate back into them, as it has been doing. And we want to see, NASDAQ catch up and start putting in all-time highs as well. I'll cover small caps quickly here too, because small caps have been leading the charge in a lot of this, and honestly it's really been slept on. I don't see a lot of people actually talking about small caps on Twitter, which is interesting because it's been one of the only markets that's been pretty consistently trending this entire time. So I'm sure people do. I'm probably just not, my page probably just isn't picking it up as much because I also don't talk about them either. So worthwhile for sure. So last week I had a couple really nice small cap trades on Rusty, again, because it's been trending a lot better than the rest of the market. So it's been fairly straightforward. So the big thing for me is it's the exact same thing. We put in new all-time highs on Friday on Rusty as well. So small caps have been leading. I want to see small caps continue to catch a bid. Obviously, if we're going to go higher, I want to see those names continue to rip as well. Same thing, we have a double distribution weekly profile, pivot 30,050s again, which is basically Friday's low, Friday's low. We don't really want to see acceptance below this. So if we have any pullbacks, down into the 30,050 range, we want to see this bought very, very quickly. I mean, really what we want to see is no real acceptance below 30,060s, but I think you give it enough lenience down into 30,050s to use this as a decent pivot moving forward. So really any stabs below any holds of this. Again, just going to be looking for the continuation long trades, continuation into price discovery. And if we start to lose this upper distribution from last week, this very clear shelf that we have going on here, then the move back down to last week's POC at 3,035. Hard to talk about NASDAQ and Rusty when the numbers are close like this, with a with a zero difference. The move from 33,050 down to 3,035s, I think, would be pretty quick if we start to lose 3,050s. So, and then obviously, another short-term liquidation could definitely happen. But again, uptrending markets, bull markets, those liquidation breaks usually are going to strengthen the move until we see a real shift in tone. So it has been slow, grindy tape the last basically week and a half, essentially after we had that massive breakout move. We've done, not a lot. I do think what happened Thursday, Friday obviously is important contextually. And then it'll be important early on, what happens in this range that we talked about. So hopefully it's a fairly straightforward week. I think, just from a pure, levels perspective, it's fairly straightforward. There was nothing really surprising to me last week. I mean, as much as it was grindy and kind of messy, again, there was nothing really surprising to me about last week. It's very common to consolidate and compress price when you have, a massive outlier move like that. The market takes a breather. Not really surprising. It took that long. We could even consolidate even more this week. I hope we don't, for the sake of my sanity. I hope we can get some continuation trades, and we don't just compress more. But we'll have to see how this shakes out. So hopefully that helps. If it does, like the video, subscribe to the channel if you haven't. Appreciate your time. Thanks very much.